Hi guys, welcome back to my channel. So in today's video, I'm going to go through how to trade options for beginners. So I know a lot of people are coming from equities trading or, Forex trading or crypto trading or whatever the case may be, and they kind of don't know exactly where to start with. So in this video, I'm going to go through kind of the steps that you need to take in order to start your options trading journey, the basics of options, what are they, why you should trade options, why they might be more beneficial for you than trading equities or anything else. Also go through kind of the difference between equities and options and how you can capitalize on both in the market depending on overall market structure and market sentiment. But this is a really, really great video. If you don't know where to start, if you don't know what books to read or what internet sources to look at, I'll put all of it here. I'll link them all down below so that you guys have everything. And I'll go through exactly what helped me and what I read and what I looked through and what I watched in order to be able to kind of start my journey. And there's a lot of information on the internet, so it's kind of hard to sift through all of it. So I'll show you guys what was helpful for me, and I'll link everything down below for you guys as well. Oh my god, I'm losing my voice. As always, don't forget to hit that like and subscribe button, and let's go ahead and get started. All right, guys, so let's go ahead and get started. I just drank a Red Bull and it's almost 9 o'clock at night and I'm tired. So like I said, I'm going to go through kind of the steps that you need to take in order to start your options trading journey and kind of what are the basics that you need to know, and then some informational guides that you can utilize to help you as well. So first things first, you need to find a broker. So if you're coming from equities, you should already have a broker that you're utilizing. If you have not traded at all and you're going straight into options trading, these are the two brokers that I utilize. So I use Interactive Brokers and Thinkorswim. I use Thinkorswim to chart. I used to use Thinkorswim to trade on. However, their fills are a little bit delayed sometimes. So I moved over to Interactive Brokers and I absolutely love them. When you do sign up for the broker, you need to sign up for options trading privileges. So make sure that you contact the broker and you're able to have those permissions available prior to you starting to trade. For me personally, these are all of my Interactive Brokers market data subscriptions. So these are all the ones that anyone that has Interactive Brokers, you would necessarily need to trade SPX, to trade SPY, to trade options and futures. These are all of the market data subscriptions that you need. I put the screenshot in there for anyone that uses Interactive Brokers that wants to get into options. These are all of the subscriptions that I have. One thing that I do want to mention here is when you are signing up, please don't sign up for a professional. One, they will charge you way more for your market data subscriptions and you're not a professional trader most of the time. So make sure that you are just signing up for a basic day trader, not a professional day trader, because they will charge more for your data subscriptions. All right, so moving on, I'm going to kind of go through what options trading is, kind of the pros and cons of trading options, and why you should think of potentially moving from equities into options or just kind of giving it a try. So what is options trading? So I'll go through equities first. So when you're trading equities, you're buying a share on that stock. So you necessarily own a piece of that stock. When you are trading options, you are buying a contract. So you're not buying shares of the stock, you're buying a contract. That contract gives you the right to buy, 100 shares of that stock. So each contract that you purchase, each contract is worth 100 shares. So when you purchase a contract, it gives you the right, but you're not obligated to purchase the shares of the stock once the time comes. So basically, like I said, every contract is worth 100 shares. So if you're purchasing 20 contracts on one stock, that's equal to 2,000 shares of the stock. So keep that in mind as we go through this. So when you're trading options, the risk is limited to the amount you pay for the contract. So what this means is, let's say you buy one contract, that contract costs you $200 total. That means in that position, you can only, oh my God, I'm losing my voice. Okay, back to my point. So let's say you pay $200 for a contract. That is the total cost of your position. That means that you can only lose $200 max in that position. You cannot lose more than $200, whether you're buying for the upside or downside. So your risk is limited to how much capital you've invested in that position. So let's say you've bought $500 worth of contracts, or $2,000 worth of contracts, or $3,000 worth of contracts. Whatever your risk or your capital is in that position, that is the maximum loss that you can take. On the equity side, however, sometimes that loss is infinite, or if you don't set a stop loss, you could take a heftier loss depending on where you set your stop, etc., etc. So each contract has a couple things attached to it. The first thing that you want to pay attention to is the premium fee. So when you're buying a share, you pay whatever the stock is currently trading at. So for example, if you want to buy Tesla, I think Tesla today closed at $180. So Tesla per share price would be $180. So one share of Tesla would cost you $180, and then multiply that by however many shares that you want. Similar to that, options contract have a fee as well. The fee is not obviously the share price of the stock. The fee is called the premium price. This is the price that is attached to your options contract. So just like you would go to the store and buy a gallon of milk, let's say is $4.99. I think it's like way more expensive than that right now, but let's say the gallon of milk is $4.99. That is the price that you pay for 1 gallon of milk. Similar to that, an options contract has its premium fee. So whatever the contract is, the price of the contract is what you will be paying. So let's say the premium price for one contract that you want to buy is $5, okay? So that is the price per contract that you have to pay. So if, let's say, for example, off of this $5 contract, you want to buy 5 contracts, okay? So you take 5 multiplied by the 5 contracts that you want to buy, multiplied by 100. The reason that we multiply it by 100 is because each contract is worth 100 shares, okay? So 5 times 5 would give you 25, times 100 would give you 2,500. So this is what the price of your position would cost you. So 5 contracts of a $5 premium price gives you $2,500, okay? If let's say you were buying, a $10 contract, each contract is worth $10 and you only want to buy one. You would do 10 times 1 times 100, okay, would give you $1,000. So each contract would cost you $1,000, okay? So that's how you can calculate the cost of your position depending on what the price of the premium is per contract. All right, understanding the basics. So on this specific slide, I've put some of the key points of options. So obviously I can't go through A to Z option trading with you guys, but I can give you kind of the key points that you would need to identify and kind of be knowledgeable of prior to getting into options. And I think these are the basics. Even if you read any book or look at any resource, I think these are good to have kind of these vocabulary words just before you get into it, so you kind of have a basic understanding so you're not confused all at once. So the first thing that you want to pay attention to is the options chain. And I'll pull up my options chain for you guys and show you in a second. But basically the options chain is where you're going to find all of your contracts. This is the place where you can buy, sell your contracts, look at the contract's premium price, look at the strike price, look at the volume on the contract, whole bunch of things. Everything is in this options chain. So you really want to get familiar with how the options chain in your broker works, how you utilize the options chain, and so on and so forth. We've already went through what an options contract is, how many shares it's equal to, and the premium price on it. And then options contracts have 3 other things that you need to pay attention to, okay? So they have a premium price attached to it. They each have an expiration date attached to them as well. So what this expiration date shows you, so every single contract that you look at is going to have an expiration date. This is the date at which you can exercise your specific position. And you don't need to worry about exercising right now, but just understand that concept. The expiration date, depending on what you're trading, is going to be different. So most contracts expire on Fridays. So they're weekly contracts, they expire on Fridays. And then you have SPX and SPY. So if you trade SPY has Monday, Wednesday, and Friday expirations. And then SPX expires every day. So it has contracts that expire Monday, Tuesday, Wednesday, Thursday, and Friday. So you can trade 0 DTE, which means same day expiration on SPY and SPX. The only other day that you can trade same day expiration for your other stocks is going to be Friday, because that's the day that most contracts expire. And you could purchase the expiration date as far out as you would like. So depending on what strategy that you're implementing, whether you're implementing swing trading, day trading, scalping, that would all reflect in how you select your expiration date. So your expiration date will be dependent on the play, the strategy that you're implementing, so on and so forth. You can buy a year out, you can buy 2 years out, you can buy months out, weeks out, and then same day, like I said. The second thing, the third thing that is attached to your contract is going to be a strike price. This is the price at which the contract can be exercised. So we went through, you have the ability to buy those shares, but you're not obligated to. So if we look at the options chain here on Tesla, okay? So this was this week's expiration, January 27th. So these contracts are already out. So let's look. So what you want to look at first, okay, so this is the ticker. So you can change the ticker to whatever you want. Let's say we're going to look at NVIDIA. You type in the ticker here. It'll show you NVIDIA, what it's currently priced at, and then so on and so forth. As we look at the options chain, the left side is going to be your call side, and the right side is going to be your put side. Calls are if you have bullish sentiment in the market, you buy calls. So if you're looking for the stock to make an upside move, you purchase calls. If you're looking for the stock to make a downside move, you're purchasing puts, okay? So as we look at this options chain here, you can see this right here is the expiration date. So these contracts that we're looking at right now are expired today, okay? Then we have February 3rd, which is next Friday, and then every week after that. Then you have your monthly expirations, and then down here you have your yearly expirations, so you can buy out to June 20th, 2025 on Tesla, and then so on and so forth. Okay, so let's just say we're looking at next week's expiration for Tesla. As we look at the options chain, okay, this is your call side, put side. Right here is also going to show you the expiration date, February 3rd, 2023. Under this column is your strike price, okay? You can extend the strike prices to however many you would like to see. These are all of Tesla's strike prices that are available for purchase, okay, currently. I usually keep it at 10 because I don't buy way too far out, okay? So these are the strike prices for Tesla. So for example, let's say you buy the 200, okay, the 200 strike price, you buy a call and the 200 strike price. So a call means that the stock is going to make an upside move, all right? So Tesla is currently trading at 195. Tesla makes a move up, breaks through 200, okay? So that means your strike price has now hit, and if you would like, the strike price is now in the money. So if you would like, you can then exercise your position, okay? You do not have to wait to the expiration date to exercise your position. Once the strike price has hit on your stock, you can then exercise your position. I wouldn't worry too much about exercising, but I just want you guys to kind of understand the concept of that. Okay, so this is your options chain. That's kind of the basics of your options chain. This is your ask price, the price that people are willing to sell their contracts for, and this is the bid price, the price that buyers are willing to buy that contract for. Usually I buy at the ask and sell at the bid price. So currently 200 contract on Tesla would cost you $8. So if we look down here, I'm sorry, on NVIDIA. I keep saying Tesla and we're looking at NVIDIA. So down here you can see buy 10 contracts of NVIDIA, February 3rd, 2023. These are weekly expirations with a strike price of 200. We're buying calls at a price of $8.35. It is a limit order. You would then confirm. And so those are kind of the basics that you need to know about options trading. So why should we trade options versus equities? There's a lot of different opinions about this. So I'm just going to give you my real and honest opinion. I started trading options 2 years ago, 2.5 years ago, I believe, in the summer of 2020. And ever since I traded options, I have not gone back to equities. The reason that I like trading options is, the first and foremost, it's cost efficient. So you don't need a lot of capital to start trading options. I usually recommend newer traders to start with anywhere from $1,000 to $5,000 when they're starting their options trading journey. I don't recommend starting with anything more than $5,000 as a beginner trader in options. You just saw one NVIDIA contract only cost you $800, so you don't need a lot of capital to start, trading or to start your options journey. So like I said here, a trader can enter an options position similar to a stock position, but at a lower cost. For example, 100 shares of a $100 stock is going to cost you $10,000. However, if you purchase one call, that one call is worth 100 shares of that stock. That one call's premium price is $20. That is only going to cost you $2,000. You're risking less capital with higher leverage, okay, versus more capital at risk with trading stocks. You're getting similar ROIs, if not more, because options tend to be a little bit more volatile than equities. They are more volatile than equities because they're not as liquid, okay? And you have your expiration date. So there's a lot of other things tied to your options contract that makes it a little bit more volatile than trading equities, okay? So it's high risk, high reward. However, if you are trading properly, you're trading with a good strategy, and you're trading with the knowledge that you have, you're not just throwing money at the market, is 100% profitable. It's a really, really great way to start trading in general, in my opinion, especially if you're a newer trader. But like I said, it is high risk, high reward, so it's not something that I would blindly jump into. Personally, I did like that I had experience in equities prior to getting into options trading. I don't think that you necessarily have to have experience in equities to start trading options. But the one thing that trading equities taught me is the emotional side of trading. So sometimes when you're trading options, if you just jump straight into options, you miss out on that emotional side of trading. So keep that in mind. It is high risk, high reward, but if you are trading it properly, you are trading it with a strategy and with solid knowledge, it is a great way to get into investing in day trading. All right, some of my favorite learning resources. These are just a couple of the ones I have, looked at many different resources over the years. A lot of YouTube videos. There's a lot of great YouTube traders as well. You kind of just have to sift through what's actually really good information versus, like I said, BS information. But these two books and this one site are really, really great. So Understanding Options by Michael Sincere. I have pushed this book ever since I started trading options. This was the first book that I read. It is amazing. It's easy to read. It's a very small read, not a huge book, but it goes through everything you need to know about options trading. It goes through really, really in-depth strategies, but also the basics as well, which I love. And then you're trading options for dummies. I know this kind of, everyone looks at these books and doesn't take them as seriously, but these books really, really helped me when I first started trading. Even though they may seem like they're not helpful, or people may look down at these books because they're written in very, very layman's terms. And I think a lot of people like to learn like that. I personally like to learn like that. And if you guys have seen my YouTube videos, they're in very, very basic terms. I don't like when people teach things, and I think it was hard for me even when I was in college, when I was in high school, when professors would teach in very complicated terms, or would teach just all over the place, very erratic. This book is very, very simplified, and I think that a lot of people like that. And I personally like simplified learning. I don't need you to throw so many big words at me. I don't need you to throw so much information all at once. This is broken down perfectly for anyone that is a beginner trader getting into options. It is a great, great read. So definitely recommend it as well. Don't overlook these books. These are really, really great books for traders to start off with. And then Interactive Brokers actually has a Traders Academy that's really, really good. There's a lot of free information on Interactive Brokers, and there's a lot of free information pretty much on any broker that you're with. Interactive Brokers is the only one that kind of has broken down videos specified towards stocks, the economy, and options trading. So I think that's really, really great. I haven't seen any other broker that has videos like this. Thinkorswim does have some information as well on options, but overall I think Interactive Brokers has really, really good information. So if you do sign up for an account, these are all free. You can watch them for free. So make sure to take a look at that too, because they do cover a lot of in-depth information and a lot of basic information as well. All right, guys, so hopefully this video was helpful. Like I said, I went through most of the basic things that you need to know, that you need to start off with in order to begin your options trading journey. I didn't get into really in-depth stuff because it would just make this video way too long. But hopefully the stuff that I went through and kind of the basics of what you need and a step-by-step guide. A lot of people sometimes need that because when you jump into options, it kind of gets overwhelming with so much information out there. So hopefully this was able to kind of break that down, kind of guide you to what you need and what you kind of don't really need to worry about too much. All right, guys, so that's it for today's video. Thank you so much for watching. If you have any questions on anything I went through, I know there was a lot of information in this video, so take your time, break it all down, and learn it step by step. Again, if you have any questions on anything that I went through, feel free to comment them down below, and I will see you all in the next video. Bye.